Hey folks, Dan Frio here, the rate update. I apologize, I had some technical difficulty and we are just logging in right now. So thank you so much for waiting. It's the Nico show. Today we were going to just talk about, any questions that you guys have. What I want to do is bring you up to speed on what's going on in the market right now. So let's go over to that. And here's what the MBS market's doing. We love it. We love it. What this means, again, guys, when this number is going up right here, this is the price of the mortgage-backed security bond. It means rates are getting better. Okay, so I think we might have hit a short-term bottom. But Federal Chairman Powell is going to come out and speak in about, well, I think he might be speaking now. So let's see what he says. So that could throw some major hiccups in the market, but this is good. Let's look at some charts here just while people are adding in. We see right here where I think we hit just a short-term bottom right through this area here. I'll get my pointer out of the way. So guys, we're just waiting for people to join us. Then you can start asking away. But if you do have a question, go ahead and ask. But this is what the market's doing right now. That's great news for that. Just an update on two websites. This is the credit score website that I just created about a couple of years ago, but I updated it and it is in action right now. All you got to do on this thing, and I'll tell you something, a little trick. In here, go to this tab here. If you want to monitor your free credit systems scores, click this. It's a free system. Don't apply for any of the upgrades or anything just use the free system. If you really want to know your credit scores, your true credit scores, your FICO scores, you click this button right here. So then you can do some other things down here. So that's that. Our website. So guys, I'm still getting questions with people on YouTube saying, hey, Dan, you know any lenders that can help me? Guys, that's what we do. Oh, I'm sorry. I didn't bring Nico in on the equation. Add to stream. Hey, buddy.
Hey.
I saw you there, but I didn't click in. So if you're out there and you need assistance with a mortgage, that's what we do, folks. Okay, so I had somebody post today saying, hey, my rate was X. And Dan, you know any places that can give me a quote? That's what we do. So that's why we're here. That's what we're trying to explain to you. I got a special guest at 3 today, so I'm going to be logging out of here just a little bit early. It's Jeb Smith. He's a fellow YouTuber, YouTube influencer. He's tearing it up on YouTube. He is out in Southern California. He'll be joining us at 3 o'clock to answer some questions about the housing markets and his insight into the housing market, especially on the West Coast. So as you guys come on board, please give us a quick little shout on where you're coming from. Just put in the state or the city or whatever. I'd like to just know who's joining us throughout the country. And then ask any questions that you have. Nico, anything to add to it?
That's pretty much it. I mean, most of the stuff that's coming in right now are lock and shop options. So if you're in the market, either building a new home and your closing's now for a couple months, we have options for you. Or if you're looking to buy in the next couple months, we have options to get a rate locked in today for you guys.
Cool. So guys, just letting you know what we do. We are a mortgage broker. We're one of the largest in the entire country. We can service, probably shortly, we'll be able to service almost anywhere in the United States. So that's a kudos. And we're reaching out to builders and realtors that are representing builders to help give you guys a promo on the channel. So what we're going to do is we're going to highlight builders and construction companies all over the country to get out the word on what they're doing and what they have to offer you guys in regards to that. And then we can talk about your financing options when it comes to the construction part, because that's one of the biggest parts of our business. And we're competing, I'll say it we're kind of competing with the builder's lender, but it's not much of a competition. But we got somebody just came in from Ohio. We have somebody from Wisconsin. Please, guys, I see that there's more than 2 people on here. If you guys would do too, please don't forget to give us a thumbs up. So any questions out there that you have, where mortgage rates are going, you see a lot of things on YouTube now saying the housing market's going to crash, house prices are going down, foreclosures are up. And all this other stuff. So let me give you my 2 cents on there while people are joining us and asking questions. So one of the things I see today is a lot of headlines saying that foreclosures are up dramatically. They're up 33 in one instance and 88% in one instance. Let me just tackle that. Well, again, if you've got any questions, please ask them. What's happening is the past 2 years, basically people were in forbearance and there was a foreclosure moratorium. So there basically almost couldn't be any foreclosures. So when you're down to the historic lows, basically the lowest point ever, just an uptick of a little bit is a big increase. Let's say if you go from 1 to 2, that's a 100% increase. Okay, get my point. So that's what's a lot of the hype is. Do I see foreclosures truly happening? Here's my background on that part of it. The forbearances helped a lot of people. The mortgage lenders or the banks right now are helping a lot of people get out of that situation because you have equity in your house. Just think of it. If you bought a year ago, 2 years ago, you probably have a good amount of equity in your home. So most likely when you get foreclosed on is basically when you're just like, you're usually upside down. So if you're in a tough predicament right now, talk to a realtor, maybe get your house on the market. That might not be your ideal situation, but it could possibly get you out of this instead of a foreclosure. Once you go into a foreclosure, it's just the attorney's clocks are running and you're just going to lose all your equity. Okay. Another highlight, I'm going to say this out there. If you're out there and you've bought your house within the last year, 2, check your mortgage. Check and see if you have PMI. Okay, let me give you a little hint there. There's 2 ways you might be able to save money if you're a current homeowner right now. 1, check with your lender, see if they could drop your PMI. Let's look at it. You have PMI. Why? Because you don't have 20% equity in your home. Well, if home values went up last year, basically across the board on average, 18 to 19%, that'll give you the 20% you need. So call out to your mortgage lender and ask them to do an analysis to see if they could remove the PMI on your loan. However, if you have an FHA loan, it doesn't work. You'd have to refinance. And in today's rates, it probably doesn't make any sense to do that. So that's that part of it. Another thing is look at your homeowners insurance. Okay, I was able to save recently to about 2,000, I think it was like 2,180 in bundling my homeowners insurance. I got a link to my buddy down below, and he gave me a quote, and I finally was like, I'm with whatever company I was with for 20 years. And I finally made the move, and I was able to save just shy of $200 a month, okay, just by making a phone call to that guy down below. So that's another way to do that. But the tip of the day is call your lender and see if you can get rid of your PMI. So that being said, it is Open Forum Tuesday where you guys ask all the questions that you have in regards to home ownership. So there's a bunch of people on here now.
Dan, while we're still waiting for those questions, I know you did want to review the rate changes in the past year. Is that something?
So, okay, great idea. So what we have right now while we're waiting for some questions in there is here's what's going on with mortgage rates. Okay, I did this little snapshot. This was even surprising to me. I was doing a video the other morning and I'm like, you know what, this rate, man, that rate doubled since where we were last. This is on average where, let's just go over this rate sheet. So every morning I post rates and I go over the 30-year fixed, the 15-year, the government, the jumbo, and the 5/1 ARM. This is basically where we were right at the end of 2021, right here. Here's where we were just the other day. Look at the difference. You can see the 15-year rate. And again, guys, this is 4 months, 4.5 months, is almost doubled. Okay. You got the 30-year fixed up 66%. FHA's or the 15-year almost doubled. FHA almost doubled. Jumbos are up and ARMs are up huge. Okay, so that's what's going on in the market. Our biggest product that we still have to this day is the lock and shop and the extended lock features that we have. So Nico, you want to explain the lock and shop?
Sure. Yeah, so the lock and shop product, it's a great product, especially if you're in the market to purchase the next 3 months, maybe even 6 months out. So most lenders are going to require you to have an accepted purchase contract with you and your agent and the sellers before they let you lock in that interest rate. With the lock and shop product, we're able to lock you in after we get you pre-approved. We'll go over rates, we'll go over pricing, different time frames to see what fits best for you guys. But then we can lock you in so you're not worried about rates. So the Excel sheet Dan just showed you, within 4 months, they almost doubled. So this is a way for you guys to secure a low interest rate now. But the nice thing is, let's say you guys don't find a house for 3 months. If rates are lower in the next 3 months, we will get that lower rate for you guys at no additional cost. So it's really like an insurance policy on your mortgage rate. There's no cost to use it. Let's say we get you guys locked in for a 6-month rate and we're 4 months down the line and you're like, Nico, I just don't know if this is the right time. I can't find anything. You guys didn't lose anything.
Yep. So that's one of the biggest features we have right now. If you plan on buying a house within the next month or two, lock in now. We have a lock-in shop program. Basically, you lock it in now. The other one is for a lot of, and this kind of tapered down a little bit lately because the phones aren't ringing off the hook like it was for the longest time, is if you're out there building a home, okay, you're at the builder's mercy in the whole transaction, basically. Okay. So, but what's happening to a lot of people, just think if you were in the situation where last December you got pre-approved within 30-year fixed rate, and the rate was 3.22. You bought it down to 2.99. Okay. Well, today, 5.36. So it's up 66%. How much of more of that increase to your payment would that be? Well, let's say if you locked in at that time for the 6-month lock that we had, you would be way below this. And we have many of those closing right now, but maybe it's my fault that I'm not getting the word out to those out there to show them or teach them these products that we have to offer. So if you're a realtor out there, please educate your consumers. If you're a consumer out there, help us share the video. Give us a thumbs up, share the video, get more and more people. Because the frustrating part is we're trying our darndest to get the word out to help consumers buying homes. But the tough thing is when I see a lot of posts on emails from people and YouTube posts and everything saying, hey, Dan, they ask questions not knowing that these are the features we have. I blame me. Okay, I blame myself. I need to educate and get out there more and more and more. So that's what we're really diligently working on. So let's get started with the questions. I don't know how to. JM.
JM.
Want to build a house in the future. When is the best time to do it? Next 4 years, 8 years? Dude, I don't know. Dude or dudette. I don't know what next week's going to bring. Why are you? I guess my question would be, why are you thinking 4 to 8 years out? Unless you're in college or something like that where you can't do it, that's one thing. But where are we going to be 4 to 8 years from now? If you think about it, rates are probably going to be higher. Prices 4 to 8 years from now are going to be higher. Where they're going to be in the next 3, 4, 6, 8 months, I say stagnant. And I'm going to have Jeb Smith on later today to explain to you the housing market, the numbers, how there's less and less bids on properties. So when you start seeing, house values are starting to come down or whatever, the main culprit for that is just there's not as many bidders on the property. Usually and Jeb will share a story with you. He just sold a property and I think they had 20 bids and he said there could have been easy 40 or 50. We just shut down. And now he's like, we're getting back to some normalcies. I talked to a lot of realtors who are saying, instead of getting the 15 or 20 bids, we're getting 3, 5, 8. That's good for the consumer out there. What that's going to do is you don't have that bidding war. It's going to start to stagnate prices a little bit. I didn't say they're going to drop because you still have a huge housing shortage and a big demand.
You want to take it?
Yep.
And Nico, where do you think rates will be in September?
So let me go ahead and start that. I'm going to show a chart here real quick.
Yeah. So while Dan pulls that up, guys, we were just talking this morning. We think rates are going to be stagnant from right here, right now, next couple of days. But in September, it's a bit farther out. I don't see them changing that much. Dan, what do you think?
Yeah. So here's what we'd be looking at. Here is this wasn't really what I wanted. Let's go down to Mortgage News Daily. It doesn't have the best chart there. If I can go into mortgage rates, you're going to see that we kind of hit a snag here. I won't say a snag. Let's go to this. This is the best way that I can indicate it. So down below is the 5-year. I think it's the 5-year chart. Let's go to the 5-year chart for the MBSs. Okay, so here's where the MBSs are over a 5-year time frame. What is the MBS? I won't dive into it hugely because there's probably a lot of followers on here. The MBS basically is telling us the demand for bonds, the mortgage-backed security. So when we follow this trigger right here, it's showing us how much demand, what the price and supply is and everything of mortgage-backed securities. When the price goes up, like you're going to see here, mortgage rates go down. Okay, so during this whole duration of time from, let me get this at 2019, as you can see up above, all the way to 2021 and halfway through that year, you're going to see the MBSs were basically an all-time high for the last 5 years. Let me see if I can go back even further. Okay, so basically we were at the historic lows from 2016. So now let's see where we are. We are actually below where we've been in the last 10 years. Okay, so my feeling is, yes, there has been a lot of exuberance in the markets, but the government, the Fed, everybody else can't let this thing go off a cliff, because housing is a huge piece of our GDP. It employs a lot of people, laborers, suppliers, shippers, and everything else. So my assumption is, or my hypothesis is, we overran this chart a little bit. So I'm seeing rates kind of stagnating right here. I'm good at this level. We're at the mid five range. That's where I thought we would be at the end of the year. And we got there very, very fast. But my expectations are to kind of stick from here. Here's my thoughts behind all this too. I'd love your feedback. Is inflation. I was cutting the grass on Sunday, and my neighbor came over and said, my daughter, she moved out 6 months ago, and she is struggling right now between the cost of food, gas. We live in Chicago, so she has a 20-mile plus commute every day. He's like, she's getting clobbered. Okay. I'm in an okay neighborhood. It's upper to middle class. If we're starting to feel the pain in those areas, a lot of people are going to feel the pain. I'm not sitting here saying, I'm the higher and mighty. I live in a gated community, which I don't. It's an upper middle class. I'll put it that way. What I'm getting at is, if we're all feeling the pain, I can assure you that the average person out there is feeling the pain as well. So, I'm expecting them to stagnate right here, unless we got two synopses. There's two scenarios coming. Inflation still crazy, out of control. The Fed might come in and say, okay, instead of doing 50 basis points, we'll do 75. It'll hiccup the markets. Stock market will crash. Mortgage-backed securities will run. Rates will go up. And then, trust me, probably within 3 to 6 months, the Fed's going to step in and say, we overdid it. So that's my projection. I just hope they don't overshoot fast. Hopefully that answers your question. But thanks so much for that. I apologize. I didn't want to put I hope you don't care that I popped you up. You're in Kissimmee, Florida. Sweet. I don't know Florida well. I have a place in Cocoa Beach. Love it. My wife's down there. She's been down there for about a month. She comes back tomorrow. I'd like to see what she looks like again. So thanks for joining us in Kissimmee, Florida. I would love for you guys to reach out to us, me even via email. Let me know what your housing markets look like. You can post it on here. How's your housing market looking? Are you starting to see some ease in the markets? Are you out there putting bids on the house? More houses are coming on the market. Are you able to put an offer in without 500 people behind you? Those are the things I would like to learn from you, the consumer out there, as well as realtors. So thank you for that. Sumit, my man, thanks for joining us. He is one of the main sponsors of our show. I think he is. If you're one of the partners and you join our YouTube channel, thank you so much. I greatly appreciate it. If you post anything, I'd be more than happy to answer it immediately for you. But thank you so much for joining us today. Do you think the housing market is going to crash anytime soon? It's funny you said that. Again, I have a special guest coming on at 3, so we're going to try to get on and off of here fairly quick today. He's a big YouTube influencer. His name is Jeb Smith. If you watch me, you probably were watching him because I promoted him for the past year or two. I don't mean I promoted him. You get what I'm saying. He has a take on it, and I also have a friend of mine, Steve Invest. He just posted a video this morning too. The nice thing I like about these guys is they in their thumbnails and in their descriptions, very catchy. I'll put it that way. They're very clicky. Okay. But you click it, and the biggest thing I like about them and why I reached out to them, but they give you the truth. They tell you, okay, here's what's going on. We have a soft market over here. We don't have as much demand over here. They can tell you the housing, supplies, demand, how many days on the market, have there been any price reductions, the inventory, what is going on. That's why I reach out to realtors all over the place. If you're a realtor out there, please contact us. If you're not, you might get contacted by us, because I have my team just pounding realtors right now. We're not asking for your business. We really aren't. We're saying we have a huge community here, and we want to keep this business in the family. So if you apply for a loan with us, we would love to refer you to one of our YouTubers that is a realtor in that area. So if you're a realtor in the area, please, I'm going to put up Nico's banner here, right here. Reach out to Nico. He would, let me find it. There it is. There's his email down below. Reach out to him. He'll add you to our list, and then we'll make sure if and when we get a client in your area, we reach out to you to give you that feedback. But okay, let's keep going. You want to read and I'll answer?
Right. Yeah, I got you. What are your thoughts about buying discount points in today's market? I think it's kind of funny because we reviewed that in one of your last videos, right?
Yep. I personally, right now, I would not be a buyer of buying it down. Okay. The reason being is, look at the chart that I have posted up there. Okay. We are at basically a 10-year and 8-year, what is this? All time goes back to 2010, probably a 10 or 12-year chart. This is the MBS market. This isn't the rates. So be cautious of that. But the MBS market shows us the reverse. Okay. So flip this around. That means we're at the highest levels in rates than we've seen in the last 10 to 12 years. Okay. And look how fast we got there. You're talking a matter of 90 days, 120 days, if that. Okay. That is a major run. It can't hold up that pace. I guess it could. But I'm starting to see things too of the price at the pump, the price at the grocery stores, and the price everywhere is really starting to tighten people up. So I think the economy is just doing a lot of the Fed's job for them. What they expected would have happened earlier than this. And I'm the same way. Like, for example, I said, when the forbearance is over, you're going to see a flood of houses come on the market. Well, why didn't you? Because of the chart that I'm showing. These people are getting modifications at 2-3% on the mortgage rates. Well, you sell that house, you go to buy another house, and now the rate's 5 or 6. Hell, you should have just stayed in the house you were in. So that's why I think a lot of this is taking place. But thank you but I would not be a person in this market that would buy down my rate. I think you're going to get a reprieve 6-8 months. Within the next year, you should get a reprieve to be able to refinance at that time, and then spend that money just to pay your closing costs to get that lower rate. That's my assumptions at this time.
Alrighty, cool. As an owner of 2 rental properties, I want the market to stay up, but as a future home buyer, I want the market to come down to earth. If we can find a nice happy medium, that would be awesome.
Yeah, I keep saying the same thing with that cryptocurrency stuff. I wish I would have bought 5 years ago instead of a year and a half ago. Then I would have been able to just be able to buy anything for cash.
It was just another comment. We don't want a market crash. However, we want a healthy correction. Yeah. All right. I'm waiting for my house to be finished. Supposed to be complete in July or August. Hopefully there are no major supply delays. I'm hearing there are no longer wait lists for homes in my area.
Yeah. And you might be, thanks for the post. What I'd like to, if you wouldn't mind posting a follow-up. My question that I haven't, I was trying to reach out to a realtor I'll find her on here. I want to know what happens if you want, or if you're looking to back out of your contract because of, go ahead if you had a question.
So no, he was just adding on. He said, maybe I can go back to my builder and get a credit based on the way the market has changed, including interest rates since I had the signed contract.
Good luck. Well, we can do 2 things, but here's where rates were. So here, my question would be, and you might be a perfect person to answer this. If you went to them and said, I got pre-approved at 3, now the rate is 5.5. My payment just went up $500-600. What can I do? I'd love to know what the builders are saying. Okay, I'd love to know that. But let's see. If you need help with your interest rate, reach out to us. We would love to. Do me a favor if you would.
Yeah.
Email me a copy of your loan estimate and my email, or just email it to Nico. His email is down below. Let us review your loan estimate. And I know you're going through the builder, so you're probably getting a credit, but let us at least look at it and see what else out there is there. And I'm going to start doing on Tuesdays. I don't know who's been with me for the last 2-3 years on YouTube. Every Tuesday, I used to do a rate comparison Tuesday. I probably won't do it Tuesdays because we're doing this, but maybe Monday or Wednesday, I'll start doing it just to show you what we do, okay? How we work behind the scenes. We take your data, we scan basically the whole country, over 100 different lenders to make sure we're scrubbing the whole countryside to find a better program, better rates for you guys. Every once in a while, we do get beat because the lenders just might be that slow and they're like, hey, we'll just take the loan and make no money. God bless you. You did your job. but many times we're able to get you better financing options with less monies and all kind of other stuff.
And also, too, if you guys just want to reach out and see what you guys are getting, you guys can send us your loan estimates. I'll do a quick personalized video review for you guys explaining everything that's on there. I know most current lenders aren't doing that, but maybe we'll point something out that you guys didn't notice. So we're here just to explain and make sure everyone's learning and know what they're looking at, whether it's from us or someone else.
Because so many times people get inundated over the rate and they kind of lose fact on all the costs. Maybe there's a different program for you too. Like, for example, if they put you into an FHA loan and you're putting down 20%, is it possible to get out of that? They might say, well, the rate's lower. Well, but you're going to have probably $200-300 in monthly PMI on the FHA loan, where the conventional loan wouldn't. So maybe maybe even a 5.5 conventional loan would be a better option than a 5% FHA option. Just a thought.
Dan, they don't want you showing those old rates anymore, buddy. On the chart from 4 months ago, the Excel chart.
Gotcha. You know what? And the reason why I brought that up is I was doing a video the other day, and I'm like, I looked at the 15-year, and let me see if I can find it. And the crazy thing was, here, I'll share it with you guys, just so you see behind the scenes. I mean, this is Mortgage News Daily. So guys, the reason why I use this, it's very easy for people to understand this. If I used any other systems, it's hard because I get it, but I'm trying to just make it where you guys look at it at a glance. Take this with a grain of salt. Basically, what all I'm trying to do is just show you the trends and what's behind all of this and why are rates moving to where they are. Okay, this rate doesn't even exist. You can't get a rate at 5.36. Okay, rates go in eighths. So this would be 5.25, 5.375, 5.5, so forth. So you can't get that, or 4.79. It'd be 4.75 or 4.875 or so forth. So these are not true rates. Okay, but the reason why I do this is make it simple. But the other day I was going through here, this one right here, and I said the 15-year is a 4 point. I forget where it was. Probably at 4 point. Look at the 4.91. We were just there recently. I went, dang, that doubled. So just for kicks, I'm like, well, let me just go back to that spreadsheet and say, well, let me just plug them in. I was plugging these in yesterday, and I'm like, you got to be kidding me. The 15-year is up, and this isn't the high. Remember, the high on the sheet that I just showed was 4.9. So this was over 100% change. And guys, what we're talking about, this isn't like a year or 2 or 3. This is basically under 100 days. So I can see where everybody's getting sticker shock. It's like, if you go to gas, gas, I went to fill up my gas tank. I drive a Ford Escort or Escape or whatever the heck it is. It cost me $70 to fill the thing up. It's absurd. So it's going to be an extra, $50 a week. So $200 a month. It's a lot of money for just my little car. So sorry to rampage.
Gifted Soul, again, I'm in North Carolina. I was going to reach out before, but it ended up getting locked in with the lender back in March. That lasted until September.
Good. Well, still check us out. Maybe we can get you a better. March is, I don't know. But what I can always say is just check. The worst thing you have to do, let's say this. You email me your loan estimate. It takes us a half hour to review it, send it back to you and say, you're in great shape. All it did was took you about 3 minutes to just email me that loan estimate. That's all we're asking. Just try, kick the tires. You have nothing to lose. If we can't beat the offer, we're not going to sit there and pound you about it. Why? All you're looking for is money as cheap as you can, but you got to make sure who you're working with, because so many times you get to the last piece of the puzzle, or you're down the stretch, and then all of a sudden hell breaks loose. And then you're like, oh man, now what? And we see that all the time. I can't tell you how many times I get a call from somebody saying, hey, they were supposed to close Friday and it's Wednesday, and they just found out they can no longer close. It's like, well, how? And then we get in and try to work our magic. But that's it.
Cool. Mortgage one more, Dan. I think we skipped that one.
Oh, I'm sorry. Go ahead.
Mortgage contingency. When should I list my property? Peoria, AZ. For rent, if my new build is closing a date of August 15th, 2020.
I do now. I mean, the earlier the better. Just let them know they can't move until, August 15th or, August 30th, September 1st. But I would reach out now or try to start getting it rented now. I don't know if you're going to use a realtor or you do it on your own. Arizona, I think we have one or two realtors out there. I don't know if they're in Peoria, but if you'd like to reach out to us, we'd love to help, or at least connect you with a realtor to see how much you can get. How can they help you? How can they building manage it? If you've never rented to somebody, it could be tricky. So you might want to get somebody involved, you might not. But if we can be of any help there, please let us know. And then when my property listed contingency, if you also want us to review your loan estimate for your building that's going to be ready in August, reach out to us. Email Nico your loan estimate. That's all we're going to do. We're going to leave it at this. Email your loan estimates if you have one to Nico. Let him review it. He'll get back with you within an hour. And again, if we can beat it, awesome. We'll give you the options. If we can't, we'll be the first ones to say, God bless you. You did your due diligence.
Cool. All right. Dan, can you tell me what the rates are for an FHA 203K loan or 203K standard is? Thanks.
All right. 90, you need to keep watching the channel. Okay. So how mortgage rates work. There is no carte blanche one mortgage rate. Let me go over here. I'm going to go back to this. So this is a great learning tool, and this is why we do it. When you go across here, you're going to see the FHA rate. Okay. So what makes up this rate is basically this. It is your credit score, your loan amount, the house's value, what kind of property is it, a single family, condo, 2-unit, 4-unit, etc. Are you going to live there, or is it going to be an investment property? If you get a FHA 203K loan, that means you're doing a rehab. So do you currently own it? Or are you buying it using a 203K loan? For those out there, just to let you know what a 203K loan is, it's a renovation loan. 203B loan is a standard FHA loan that you get. Everybody gets. The 203K, there's two of them. There's a streamline, which will give you up to $35,000 to fix up the house. Maybe that's basically a TLC loan. You can paint, do a whole bunch of other stuff, but you can't do anything structural to the house. So then if you want more than $35,000, or you're going to put on an addition or something else, it's called a full 203K loan. You need a HUD counselor involved. It's pretty meticulous on what needs to be done, but it's a fantastic program. And then a lot of times those rates are very high. So what I highly suggest you do, get it. Make sure you use a good company for that. We would love to help you. Then at the end of it, refinance out of it, because that rate's probably going to be about between 0.5% and 1% higher than the normal rates. So I wouldn't pay a ton of fees because if I'm you, I'm looking to get out of this as soon as my house is completed.
Yeah, and most loan officers that are doing the 203K loans are most likely going to suggest that to you too as well.
Yeah,
up front.
Hopefully.
Yeah, hopefully, right. Any updates on getting broker license in Michigan? Last time when I chatted with you guys, I said it was in progress. Dan actually just made a video on this.
And I will have you got somewhat great news. If you would, call in. We can explain everything to you. You can even ask for me. I'd love to talk to you, and I'll explain to you what's going on. And what we got. We have a lot of states opening up here soon, guys. So we'd love to help you guys. I'll do a huge, massive post all over the place as soon as that does transpire. But thank you guys for staying on the sidelines. Guys, what's happening is we're waiting for licensing to come through a lot of places. Within probably about 48 hours, we should have kind of the floodgates open up in regards to that. So if you applied or whatever, I did a quick video this morning just explaining to everybody, please sit tight. We're doing everything we can. The good news behind all this is we're seeing the markets getting better. So we didn't kind of step on our own toes on this one, meaning that we had you hold off for a week or two, but rates spiked. Actually, every day the rates are getting a little bit better.
Yeah. So RJC just showing us some love, saying there's 44 people watching. We only got 11 likes. Just letting everyone know.
Come on, guys. Oh, it's simple. RJC, keep an eye on those guys for me, buddy. Make sure you call them out on this channel. All we're asking for is a thumbs up.
Yeah, so this was just from the 203K. He said he's buying with his 203K.
Hey, where in PA are you? I grew up in right around Wheeling, West Virginia. So if you're on the north or the southeast, southwest, god dang, I've been in Illinois too long. Southwest, I grew up in a small little town in West Virginia, not far from, 3 miles from Pennsylvania. So let me know where you're from.
Awesome. All right, Gifted Soul again. If you want to take money out of your 401k in the home buying process, understanding tax implications. How far in advance should you do it before closing? How far should you be? Go ahead, Dan.
So 2 things. Take a loan against your 401k. Okay. You should not have tax implications. You might have something, but if you take a loan against it, basically you're paying yourself back. That's number 1. Number 2, it doesn't count against you in the loan that we would do for you, that you're doing on your new close. Okay. It doesn't count as a payment against you. The next thing is wait till the last minute. And the reason being, get all your paperwork, get it all set up, but don't have them wire the money until you truly, truly, truly need it. Because if something falls out that you don't know about the last minute, you don't want the money being transferred all over the place. So just wait till the last minute, everything's signed, sealed, and delivered, and then make sure that wire goes. You can actually wire it directly from the entity right to the closing. That's what I would do, or that's what I would recommend.
Awesome. Great. All right, Tittle D. What if I'm locked in, but when it's time to close, I don't have the money? What do I do?
You don't
like for closing costs?
Yeah, that one. It's hopefully you didn't spend it. But if you don't have the money for the down payment, there's a couple options you can do. I don't know the particular program that you're in, but you might be able to say, let's say you're putting down 10%. Well, a lot of programs only require 3% down. So maybe you adjust the numbers and you raise the loan amount, or your loan, what we call the loan to value. The loan to value is the loan divided by the value. So let's say, for example, it's a $100,000 home at $100,000 value. 100 divided by 100 is 100, or one. So it depends on where you are in that scenario. But I don't know what to tell you. If you don't have the cash at this time, I don't know. I'd love to know the backdrop of it to see what happened. So sorry, I can't answer specifically, but if you provide some more information, I'll remember Tittle was the one that asked this particular question. But if you can fill us in with some more details, I'd love it.
All right, Sanjay, they're saying they're first-time home buyer.
Congrats.
No inventory in Columbus, Ohio.
Come on. I grew up right out. Hey, have you ever heard of Wheeling, West Virginia? Bet you did, because you probably see signs in Columbus, Ohio saying, Wheeling, take this exit. That's where I grew up. There's got to be something in Columbus, but Columbus is booming. So if you want help, I don't know if you're working with a realtor. If you are, awesome. I would even like to talk to that realtor. So if anybody else we find is having your same trouble, we can refer to them. But if you don't have a realtor good in that area, I'm sure I can find you, because I grew up about an hour from there. My cousin's a big attorney in downtown Columbus and so forth. So I have connections there. I'd love to be able to help you out.
Awesome. Thank you, Dan. All right. Just too fresh. I locked at 5.5, hoping I'll be able to float down before I close at the end of August.
Just too fresh. So did you lock with us? If it's another one, if you didn't lock with us, send me that loan estimate, the loan estimate down below, send it to Nico, let him review it. Okay. Unless you spent a bunch of money to buy that rate or to lock it in or whatever that you would proposedly lose, maybe we can find you something else to give and get it better. Because if they don't float you down, then what are you going to do? So these are the options that we can provide for you. That's why I've always been I prefer to be a broker, where I'm set up with entities all over the place, because I can move you kind of anywhere throughout the country with a lender.
Awesome.
So thanks for the comment.
Just a little love from Nano Leach. So yeah, just a little love.
Harrisburg. I actually played football in Harrisburg. When I was in high school, we played a team over there. We lost.
Do you think low threes will come back in August?
No. Unless we hit a huge recession, depression. Here's my whole take on this, and I'm the first one to call myself out because I hate when I'm wrong. I was wrong on, I'll say, many things last year. The biggest thing I didn't foresee was kind of 2 or 3 events. The Russian invasion, didn't see it coming. Okay, so that hurt. The supply chain, I thought for sure it would be at least somewhat stabilized by now. Same with the Fed. So I missed it with the Fed. And rates going up this fast. I've never in my whole life seen rates go up almost double within 90 days. So with all that in the backdrop, again, I'll say I don't see any housing crash. I see things stabilizing. But if rates go to 8 or 10%, I would see a housing crash. Because nobody be buying. And then you're like, okay, I need to move. Nobody's buying. So I dodge and move. I can't just say, okay, here's where it is and never make that change. That's not a good advisor. You got to move with the markets. And that's why I do the market update every day to show you guys what's going on and why.
Cool. That one looks like that's it, right, Dan?
I got one more down here.
Oh.
No, locked with builder's lender. Email it to us, please. Nico's email is down below. Just send in the loan estimate. It's a 3-page document. It says loan estimate on the top, and it goes through all the stuff. It gives us the loan amount, the rates, the cost, the everything. Let's review it. Worst case scenario, we go back to you and say, I got nothing for you.
Yep.
So if you guys would, one last time, where's my guy? Where was he? RJC. Call him out, buddy. Got to call him out for me if the people aren't giving a thumbs up. So, any other questions? If you don't, I apologize. I'm going to cut this short. We'll be back in about an hour with Jeb Smith, big YouTube influencer, successful realtor out in Southern California, to give us his take on the market. Now, just because you're not in Southern California, don't say, well, I don't even want to listen to it. He's got great information. What we're going to discuss is, and I have my whole sheet here, and he's agreed to it. We're going to go through recession. He just did a recent video about recessions. We're going to talk to him about it. Foreclosures, interest rates, should you buy or wait, and then housing, supply. Here's why I love talking to realtors. Here's the information they provide us. And I'm trying to do this so you guys don't have to do all this. A lot of times people say, well, Dan, you just repost what's on the news. You betcha. That's what I do. But I'm trying to condense this all in one site within 5-6 minutes where you can watch all the stuff and get it. Okay. So why I reach out to realtors is to find out this, because they have the MLS. It's a database that they go in and they can find out this information. Housing supply, how many houses were added or sold within the last week, 10 days, month, 30 days, and so forth. That's huge. The demand, is there more demand? We can get his boots on the ground. How does he feel? The prices, you're going to start seeing all prices are just plummeting. Well, if you go back last year, there wasn't many sales. The year before, there wasn't many sales. Why? Because foreclosure, the country was shut down. So you see prices, people were selling their houses at the top because there's 50 bidders. Now there's 5. They don't have to, you're not going to have that much competition. So you're going to start coming back. Then you have those people that listed that high, just, hey, I'm going to throw it up there. I was almost, I'll tell you something behind the, I almost just for kicks was going to list my house on the market for like twice what it's worth, just to see what happened. I was like, what's it hurt? But my wife would probably kill me. And then we're going to go days on the market and a whole bunch of other things to get a real beat on the market. Why I like realtors, conversations with them, boots on the ground. They're talking with you guys on a daily basis. What do? We're behind these walls, monitoring rates, monitoring all the data, trying to find new investors, new programs, new stuff to help you guys with the financing. What's the tagline? We're here to educate and inform you guys everything real estate, especially the financial section. So that's why we do what we do. Is there more?
Yeah, a couple comments came in.
All right.
We got a first-time buyer in Greenwood, Indiana, but affordability is an issue right now.
I understand, and that was one of the, if you see this on my sheet, the last one I have over there, affordability. I'm going to talk to him about that. I get it, but the best thing, well, he actually made a video the other day and said, where he is, rents are like, I think it was flip-flopped or the other way. It was like rents are 60% higher than what a mortgage payment would be or vice versa. So what you got to do is look is, how much is your rent? And then how much would it be a comparable situation be for a home? And why do I say comparable situation? Well, it's hard to say, well, I got a 1-bedroom, 1-bath loft, but I want to buy a 3-bedroom, 2.5 bath, full finished basement, 2-car, 3-car garage with a big yard house. That's not, you're basically apples and gorillas. You got to look at what can you afford and then dissect the market. Here's what we'd love to do, especially with first-time home buyers. Reach out to us. Okay. We're going to analyze this. Basically, our first conversation is just fact finding. What are you looking to do? What, where, why, when, and how? Then we'll come back to you and say, okay, based on all that information, here's what we could get you. And then you decide, not us. You decide. Can you do that? Does it make sense? I can't make that decision for people. People say, oh, you're FOMO because you're in real estate and all that. No, it's your decision. I'm just here to educate and inform you guys everything real estate, especially when it comes to the finances. So that's the whole part of our channel.
Awesome. All right. William Young, Northern Maine.
Awesome. So we got people from Maine to Wisconsin to, I think we have Kissimmee, Florida. Anybody west? No West Coasters?
This is your guy, Dan. Samit, lock loans today or wait? What's your opinion?
Wait. Because you're actually in the mortgage business. So thanks for reaching out. Let me get into this. Okay, so let's see what the MBS market's doing. We're at 50. Let's see the refresh, 47. Until this reverses, I don't know. I know you follow me, and I greatly appreciate it. But there's a lot of people out there like Barry Habib's and stuff like that. They're great channels. They seem to just miss it. I try to have my pulse on the finger because this is what I do. And so if I ever see a big reversal, I'll let you know. But I'm not locking until this reverses course. I mean, it's like, if it's going better and better and better. Remember, this chart below is what's going on with the MBS market. So it's an inverse relationship to the rates. So when this chart down below is going up, that means rates are coming down. Until I see a reversal, meaning some major red candlesticks, I'm not locking. So just stay on the sidelines right now. And I'll be posting. I promise you, I'll do a live alert if I see this make a major change. So it'll be a quick little 2, 3, 4 minute video. But Federal Chairman Powell was supposed to speak at 2 today. And I don't know if it was 2 Eastern or 2 Central. I didn't see any really major reactions in the market. So either he's not speaking or the markets were okay with what he had to say. Nevada. So we do have somebody out. Ooh, I clicked it too. Carson City, Nevada. Josh. Thanks for joining us, Josh. Maybe everybody's waiting for Jeb to come on board in an hour out in Southern California to talk with the surfer guys. So that is it for today. We're 45 minutes into it, 50 minutes into it. I apologize about the delay getting started. I had some glitches on my end. But, there is a couple others here. You want to click those? I'm more than happy to finish, guys. Portland, Oregon, I'm here. I'm a loan officer and love watching your daily updates. Understand the lingo much better when I listen to how. Thanks. You know what? I think I get more people, more loan officers than clients watching this thing, and that's really cool. My thought was this, and you might be Zeb, you might be one to tell me, and it would be free. But if I started some courses like on a Wednesday night or whatever, do you think that would be informative to people? Loan officers can come in and just ask their questions, and I can at least educate you. I've done this 33 years. I've underwritten, I've sold bulks, I've been this, I've done that. I've had multiple branches throughout the country and so forth. I hopefully I know this business, and I'd love to teach everybody. I love doing this, and that's why we do it on a daily basis.
Love it. A couple more things for you, Dan.
And Sumit.
Josh. Just a couple more praises, Danny.
All right, man. Well, that is it for today. If you would, come back in an hour if you got the time. We're going to be with Jeb Smith, YouTuber, fellow YouTuber, YouTube influencer, and Southern California realtor. And next week, we have Sir Ashley coming back on our channel. I know it's this week. Thursday night, we have Sir Ashley coming back on our channel. He's a realtor in the Carolinas, has a huge team down there. And we're going to dissect his markets to see, is that a good market or not? What's everything looking like? So God bless, guys. Thank you so much for watching. If you have the time, like I said, come back in about an hour. We're going to be doing this all over again to explain a little bit more in-depth things about housing and the numbers and breaking it all down. So thanks a lot. Take care. God bless.